Infinity Wealth, Marttand here. Okay, so the Bank of England have just announced the interest rate decision. They have decided not to cut, which I think is very sensible. But the bond market and the general financial media are all expecting at least a rate cut this year. And I had felt that, Mark Carney, this was his last meeting. So it was highly unlikely that he was really going to cut. You'll leave it to the next Bank of England governor to do that. So what I wanted to do today in this video is really discuss worldwide property, what's going on, how interest rates really affect property prices. Now, Mark Carney actually admitted that lower interest rates were having an effect on house price asset appreciation. And then lowering them obviously is going to just carry on increasing it. So it's funny, he's managed to see the light of what's going on. Other central banks, I don't know what they're doing. The Americans are talking about, reducing interest rates. And Jay Powell, who is the on the American side, the Federal Reserve chairman, he is actually talking about, well, they're not looking to actually move this year until after the election because their hands are tied. So that's the market situation, but obviously it's determined and the market is very fluid. So what I wanted to do is I've been reading quite a lot. And I wanted to give you an insight really of what's going on and how interest rates are affecting things around the world and how Brexit is going to affect us. Tomorrow, so Friday, we're actually leaving the EU. And it remains to be seen how we pan out after leaving the EU. What kind of deals that we can negotiate, and it's down to Boris Johnson's government to try and do that. So, just staying on the Brexit theme, I was reading and I was amazed. So I hope some of my Dutch mates are watching this. When I looked at house prices in the Netherlands, and I've been speaking to them for a long time, saying we should be buying houses here as well. You guys should be buying houses in the Netherlands. So interestingly, house prices in the Netherlands have increased quite sharply, actually. So, just looking at the notes that I've made, there has been a huge international investment in the Netherlands. There's been a 46% increase from foreign buyers, basically. So, in 2018, 30% of purchases were done by foreign buyers. 2019, 36%. And this is rising. So more and more foreign buyers have been coming into the Netherlands. Now, on my perspective, I think that could well be one of the main causes or the reasons why people think, like Savills, think that has been happening is because they consider the Netherlands government more stable, so it's more of a stable environment. And obviously with the Brexit uncertainty that we had in London, buyers were put off, but we've seen those new influxes of buyers now come into the UK, hopefully with this stable, more of a stable environment. The other interesting part is, if you look at the Netherlands, compare UK, I'll go around the world and I'll compare. The other thing is the Netherlands are not building enough housing. So, they've built last year 47,000 new homes. That's 37% lower than what they were supposed to build. So this building situation, and we talk about it in the UK all the time, that we're not building enough houses. Well, here's a classic example of the Netherlands. They're not building enough housing. And obviously it's pushing up asset prices in the Netherlands. Now, especially Amsterdam. I've lived in Amsterdam. I really like Amsterdam. Amsterdam's quite small. It is condensed, so asset prices are going to go up in that area. Okay, the other thing from the Savills report that I looked at was quite interesting. They were talking about Germany. Now, they expect within Germany, until 2022, they don't expect an interest rate rise at all in the EU. You're probably not surprised to hear that. No interest rate rises until 2022. Main reason why is because growth is sluggish. Even though the growth was sluggish, classic example, Netherlands, house prices increased, but they're also expecting German prices to increase because of more capital flowing around the world, because central banks are introducing QE. Where's this money going to go? People are looking for assets to purchase rather than money. In fact, I don't know. Most of you probably don't watch the financial channels. I'm constantly watching the financial channels, and I was interested to see what went on in Davos. Davos is a World Economic Forum, if you've never heard of it, and where world leaders meet and high tech business people leaders meet. Now, there's a guy called Ray Dalio who you may have never have heard of. Ray Dalio, I follow. He is the principal of Bridgewater Associates. A huge fund manager, absolutely massive hedge fund manager, very, very, very good track record. Now, something that he mentioned during Davos, which struck me back about as well, he actually said money is junk. Yeah, you heard it right. Money is junk. The reason for his saying that money is junk, and why I think a lot of money is flowing into assets at the moment, is because they're printing money. They're printing money from thin air. And if you can do that, the value of your own money goes down as asset prices are going up. So that was very interesting. I thought that little take you might find interesting. The other thing was, let's go to Ireland. So I was surprised actually to read that in Ireland house prices have fallen. For the first time since 2012. They reduced by 1.2% in 2019. And places like Dublin, and these also includes the suburbs like Cork and Limerick. They saw a slight rise in prices. But they remain, and this is the interesting part, during the peak period in 2007, a lot of mortgage companies, especially in the UK, were giving 105%, 110% mortgages, so meaning you weren't actually even putting much money down. And this obviously increased prices in Ireland by a tremendous amount. Now, if you look at today's prices from peak 2007, they're still down 32%, which is amazing. Absolutely amazing. Now, the other thing is, let's go to Australia. If we look at Australia, now, I've got cousins in Australia, so I do follow the Australian market as well. Very interested. I love property, so that's why I'm constantly looking at what's going on around the world. So if we look at, I was really surprised about this, because I expected house prices in Sydney and Melbourne to reduce, right? They did. They did come down, but the RBA, which is the Royal Bank of Australia, started reducing interest rates. Now, they haven't had zero rates. They've had quite higher interest rates anyway, compared to other parts of the world. They started reducing interest rates. Now, interestingly, Sydney obviously had a fall, and Melbourne had a fall, but they're beginning to rise. So, in Q3, which is the last quarter in 2019, house prices actually increased by 3.6%. So it just goes to show you, how interest rates are linked to asset prices and property prices. And the economy, and the weird thing is that the Australian economy, because it's quite closely tied to the Chinese economy, because it is a resource-based economy, and it's tied to China, and obviously China is slowing. GDP in Australia has been falling, yet asset prices are surprisingly increasing. So obviously people want to, and again, Australia was rampant with Chinese buyers coming in, buying in Sydney and Melbourne, and we are as well. We get a lot of Chinese buyers in the UK. So if you are a Chinese buyer, get in touch. We'll try and give you some more information. But they are trying to buy hard assets. They're trying to buy assets, especially with all this money printing going on. Now, if you look at the States, mortgage rates have dropped in the United States. Now, housing starts that were actually mentioned the beginning of this week, housing starts and the number of buildings that are built, that's dropped, which is quite surprising. The month before, they were on the rise. But property prices and asset prices, because of the mortgage rate market dropping, they're beginning to pick up. So in places like Las Vegas, San Francisco, Fort Lauderdale, which is in Florida, prices are increasing. The other thing that's quite unique about the States is that each state, if you like, has a different tax regime. So a lot of New York has actually increased the amount of tax that they charge people, and especially property tax as well. And there's been a large movement or migration of higher net worth individuals moving to Florida, where taxes are a lot cheaper. So, it's interesting, all these dynamics that are going on. It's quite interesting to find that out. Again, Canada. Canada, again, quite a resource-based economy. In Vancouver, property prices have just gone escalated. They had tapered off, but they are just tapering off. There's been a slight increase, but, from what they were last year, they have tapered off, and staying with Toronto as well. And I visited both those places 2 years ago, trying to find out what the current market was, and I talked to a lot of people there. Now, another event that I want to talk about is Hong Kong, right? So if you look at Hong Kong had some of the most expensive real estate in the world. As you can imagine, it's quite a small area. But what's happened now with all the demonstrations and that have been going on in Hong Kong, and now with the virus as well, that's been talked about. Savills are expecting Hong Kong prices to drop by 20%. Yep, you heard it, 20%. Now, you may not know, but during the Great Recession of 2007, it was mortgage-backed security that actually caused the problem. Now, alarm bells are beginning to ring in my head, because at the end of the day, Hong Kong is highly leveraged as far as property is concerned. So what kind of effect will that have? Obviously, that hasn't happened. But what kind of effect will that have on the banking system? And all international banking systems are interrelated. So, that people talk about a black swan event. I think Hong Kong could be a black swan event if this sort of thing goes on. But it's been very mindful of the coronavirus as well. And China. Now, China has been slowing with the virus. Their GDP was about 6.1, which was announced recently. But now they are saying that their GDP will be in the fives because of the virus. Obviously, people are not going out spending. Now, China is the second largest economy in the world. Obviously, that's going to have an effect with other economies around the world. It's going to slow them. But then if we look at slowing Australia, but yeah, asset prices are high. So, we have to keep an eye on interest rates. And I don't think they're going up. Unfortunately, their hands are tied under a big rock, all the central bankers. They're running out of ammunition. So how are they going to, they can't increase interest rates. If they do increase interest rates, obviously that will cause asset prices, especially the stock market, and Donald Trump loves the stock market, to come down and bleed a bit. So I think that's what their main agenda is. The reason why asset prices are quite important is because obviously all the bank lending going on. So if asset prices start to fall, the loan to value of these banks begins to fall as well. And, so they want to be aware of that. And that's why they talk about inflation, inflation increasing as well, and then wanting to get to a 2% interest rate or 2% growth rate. Now, the other thing that I would also like to talk about is the number of first-time buyers in the UK has been hit the highest rate since 2007, which is quite surprising. And that was announced by, the Halifax price rises, that they are seeing more transactions for first-time buyers. The other thing that we have to be aware of is also, as property investors, they seem to be putting on more and more legislation in the UK. Now, I'll be interested to find out what's going on around the world as far as legislation is concerned, because my research brings me to web portals where I'm finding out what prices are doing and to collecting data, but not the actual what's going on with requirements in legislation, basically. So we are seeing a lot of selective licensing going on. So to give you an example, I have quite a few houses in Northampton. Now, Northampton have brought in selective licensing. It's been there for some time, but they've now brought it in for three-bed houses as well. And £1,200, guys, for selective licensing. It's daylight robbery. It is absolute daylight robbery. But more and more landlords are now being fined, and that is what I'm reading through all the materials, that there are more and more landlords that are being fined because they're not doing it properly. Now, the way to avoid fines is actually get yourself educated, learn about it. You don't have to go on these massive courses. We will give you information, but learn about what sort of legislation you need to stay within, so that your buy-to-let, your HMO is always within those standards. So I hope you found it interesting, and it's just been a quick update. So I will see you soon. I'll do another video next week and give you more of an update. But please comment below below in the YouTube channel if you'd like us to research something for you, or you're finding out I need to know a bit more information. We will gladly make it, if it merits it, we'll make a video of it to try and give you that information. But for now, don't forget to subscribe to our YouTube channel, because we appreciate your thoughts on that. Also, ring the notification icon, the bell, and above all, like our page as well, because it means that we get more traction. But I'd like to thank you and have a wonderful weekend. Bye, guys.